Welcome to the Green to Gold podcast that informs our listeners on how the growing low carbon building mandates and liabilities can be turned into profitable business opportunities. I'm your host, Robert Politzer, and each week we embark on a journey to explore innovative solutions and strategies that aim to make building upgrades and decarbonization profitable while addressing typical client building owner objections. Today, I want to welcome Paul Rabinovitch. With over 20 years of experience in impactful investments, Paul is passionate about delivering strong financial returns together with lasting environmental and social benefits for his clients and partners. Paul is currently the senior investment advisor and lead strategist at Confidential Single Family Office, where he leads research and analysis into the opportunities to invest in decarbonizing real estate strategies. Paul, I am so delighted to have you here on our podcast today.
Thank you, Robert. It's great to see you again. And as we were saying, you and I go way back and have been active in this sector for so many years. I hope we get to share some great stories and knowledge from those times.
For sure. So why don't we start with you providing our listeners with an overview of your long journey with green building and sustainability?
Yeah, sure. Well, to back it way up, I would be remiss if I didn't give credit to my mom, who is an architect by training and really taught me the business of real estate development. My grandmother passed away many years ago, left us with a rich inheritance of $15,000, and that's me and my brothers and my mom. And my mom said, "Why don't we invest it in a row home?" And that then became a large real estate company that sort of mom and I grew up, and it was focused on social purpose real estate development. It didn't have a name in those days. It wasn't impact real estate. It wasn't ESG. It was just real estate that made us feel good about the projects we were doing and felt like we were doing more than just earning a profit. So in those days, we redeveloped brownfields, bought contaminated properties, and essentially recycled land. So to give land that had probably a industrial past a new future. And as we were doing that, it made sense to us that if we were going to fix the land, we should also put something on that land that had a higher sustainability profile. So in doing that, we did affordable housing projects as well as market rate projects on the residential side, and we converted all kinds of historic properties, old schools, warehouses, a hospital, all sorts of things that had come to the end of their usable life. And we thought through, well, how do we change them so that they can have a new life? In those days, embodied carbon wasn't discussed as much. It was just thinking about how to reuse historic the fabric of history and keep it alive. That's where I started, and it sort of like built in me the idea of doing two things at once, trying to earn a profit while doing projects that were meaningful. And but my passion has always been on the green side, as you know, you and I have a long history together of talking about how do we build a higher performing real estate assets. And I've worked in New York and northern New Jersey, Philadelphia, upstate Massachusetts, all over the place, and then and building those kind of buildings. And then I had an opportunity to work for a family office. They hired me to build an impact real estate team. And the mandate from them was build a team and deploy capital to try to develop properties that are at the highest level of performance, mostly from an energy perspective. And, our goal was always to get to net zero energy. We didn't always make it, and I'm happy to share those stories as well. We built office products, multifamily, single family for rent, senior housing. Some of them were built from the ground up. Some of them were retrofits. And, I would just share in that experience that these days, a lot of people claim like they're going to be building everything net zero from here on out, and it's, as if it's a switch, and we can just do it.
Right.
And I'm here to tell you it's not so easy.
Sure.
As someone who's invested millions and millions of dollars on behalf of a client, but millions of dollars in doing it, not every property can be net zero. Not every property can get to that level. Um, Even with the highest intentions of like that's what we're trying to get to. It's just the nature of what happens when you have a asset that's fixed in place. It doesn't move,
Exactly. Right.
and typically filled with people who do things that might be outside of what you might have modeled. People do
Yes.
random stuff
Right.
that you don't necessarily expect or think about when you're building a model of how the building's supposed to perform. Um, so I had that opportunity working for the family office, developing all of those decarbonized real estate type of solutions, both ground up, where we were thinking hard about the materials that went into the building, as well as on an operational side, embodied and operational.
Right.
And when my time there came to an end, I was talking to a different family office and sharing with them that my experience has been over the last decade, I have seen an appreciable and discernible increase in market uptake for these kind of products. You and I have always been talking about this for decades, but what I was seeing was that we in buildings that we had in Minneapolis and in Boulder and Portland and even in a small town called Huntsville, Alabama, we were finding tenant bases who really wanted this product. We were finding that when we announced we were going to be building something way above LEED Platinum or net zero, we would find companies who would come to us and pre-lease the building because they needed to be in a building like that to
Right.
satisfy their own commitments to their this is our corporate commitment. We're going to be net zero by such and such a date. Or they would be saying to their employees, we have this kind of value and we want to reflect it in our office. So I was seeing that. I was seeing that we were pre-leasing faster, that we were keeping full better. And I was seeing also that more and more municipalities were heading in the same direction. There's, I believe right now, there's about a dozen cities and maybe half a dozen states who have building performance standards. New York, obviously, being the leader, where you sit,
Hmm.
in a building performance standard, local law 97,
Hmm.
where the municipality has taken the lead and said, hey, we need to get to our Paris Climate Accord commitments, and here's how we're going to do it. We're going to lower the environmental carbon emissions from buildings. That's one of their key pathways. And it makes sense. Cities contribute well over 40% of carbon emissions. Most cities are more closer to 60% of the carbon emissions from the city come from buildings, not
Yes.
transportation or anything like that. So it makes sense. And as those kinds of building performance standards proliferate, I think there's a greater demand being generated for these kind of buildings. So kind of coming around to that, I said, I think after decades of talking about this and doing this, I think there is a shift. There is a transition taking place toward, that's paying attention to the climate, and it's an investable opportunity. So that was what I did last year. A big part of last year, as well as doing some other projects, was writing this report. It was originally, I thought it was going to be, a 20-25 page report. It ended up being 100 pages.
Okay.
But I really wanted to take an opportunity to dissect this transition and to think about it in a critical way. Like, is it durable, or is it a fad?
Right.
What really drives it? Why is it catching on now versus Bream and the US GBC are Bream is maybe 35 years old, and the US Green Building Council and LEED is 30 years old. Why didn't it start then? Why now? So I wanted to like kind of understand like what's changed, and
Right.
wrote about that. And also wrote about like some of the amazing new financial products that make this more affordable than ever. If I had, if I had more pages, I would also have like written about how some of the cost of these building materials and technologies have been decreasing over the last 30 years. 30 years ago, yeah, solar panels were expensive, but over that time, and probably got penciled out of a lot of deals because they were too expensive. Now the cost of solar panels, I think, is down 70% from those days, maybe 80%. So a lot more affordable. Plus, we're getting incentives from the Inflation Reduction Act. It just makes a lot more financial sense. So that was the idea of that report. Now I'm looking to put those findings into practice. I want to work with Aligned Capital to invest along these themes.
So I want to give the our listeners first of all, I want to reference your fantastic white paper. It's called Investment Opportunities in Decarbonizing Real Estate. And I love the investment opportunities that you led with that, because to your point, and what we've been advocating for years, this is just smart business. Bottom line, that's what's really changed, is that now green buildings, as you said, have a premium in the marketplace compared to old, tired, what I refer to as brown buildings. And
Right.
and so there really is a transformation. I want to just brief. I want to read through the thesis of this white paper, and then have you pick up from this, because it's just like I said, so fantastic. This white paper presents an investment thesis that the next 10 years will bring forth an unprecedented opportunity to invest in the decarbonization of existing buildings, the development of new low carbon and net zero energy buildings, as well as invest in materials technology companies that support low carbon and net zero energy real estate construction and or retrofit. We believe that a tangible shift towards decarbonization in the real estate sector is occurring across numerous markets, which is being driven by changes in regulatory systems, tenant preferences, and other drivers of change. These changes will be durable for a prolonged period of 10 years or more. In addition to opportunity, we also perceive a potential economic penalty reflected as loss of asset value for market participants who delay in responding to this shift towards decarbonization. And before you pick up and run with this is the way I love to couch this is that for years, there's been a strategy on the part of a lot of building owners, commercial building owners, to spend the absolute minimal amount of money to operate the building. We used to say just slightly above criminality, right? You know, and essentially, what was the strategy? It was using the atmosphere as a free sewer for carbon emissions. And those
Right.
days are coming to an end, is the way I see it. So why
Yeah.
don't you expand on some of these some of these presumptions and projections that you've made in this fantastic white paper.
Sure. Well, let's back up a second because I do want to talk a little bit about what the driver of this change is, and I think that's an important thing to recognize here is, as I said just a minute ago, we've had voluntary green building systems in place for decades. The LEED systems and BREEAM and um, all the rest of them, green globes, so many of different types of benchmark frameworks to judge the environmental performance of your buildings. And to be frank, and there's plenty of studies and science behind this, they haven't really moved the needle, right? They've done a great job of producing lots of plaques on buildings. Some of them have produced buildings that are quantifiably better than their peers, their comparable type of properties. But by and large, as sort of like a class, they haven't really moved the needle. And that's, there's lots of reasons behind that. So having a green building, voluntary green building ethic doesn't change anything. Um, I would say that the incidence of greater and greater environmental catastrophes is a reinforcement mechanism where it keeps people's attention on the problem, right? As we have more horrible hurricanes, wildfires, other global climate change indications, it makes people think about this, and it especially, I think, makes regulators and governments think about what can they do to prevent this. But it doesn't necessarily change things. The thing that I think has changed the dynamic here is regulatory, and from the government side, where and I say about 8 years ago, when we signed the Paris Climate Accords, and I think it's practically 90%, 95% of the world's countries signed on to this pledge, this commitment to try to bring our emissions to 1.5 degrees, above pre-industrial levels by 2050. That really changed the dynamic, and where you can see that best is in Europe, right? So, and that was one of the things that I looked at quite deeply, where I looked at how the Europeans, after the Paris Climate Accords were signed, basically went to work and said, okay, we need to start a regulatory system and our own building performance systems so that we can get all of our emissions under 1.5 and live up to our commitments. What happened from that is, it's in Europe, it's top down. That's not what is happening in the US. We're bottom up. But I'll get to that in a second. But in Europe, they had a top-down system of regulations. Each country is a little bit different. They all have a different flavor in terms of how they go about it, how they measure it, and how they penalize, bad performance. But they all went around grading buildings on a scale and determining a level, that a baseline level you had to get below. So when you look in the European model, you'll see that what has happened over the last 8 years is that there's a critically low supply of high performing assets and a huge demand. And so when you have that imbalance of supply and demand, what you have are higher rents. So the best performing real estate assets are getting a little bit of rent premium because the people who want to occupy them can't find them anywhere else. So in a way that redefines what we call a core property, right? A core property in real estate vernacular, office real estate vernacular, means that it's almost completely de-risked. It's in a great location, it has great tenancy, and you would expect that it would perform as close to a bond as possible, just produce a regular rate of return. The way that you could do that is you take out as many risks as possible. You have great tenants, so you don't have defaults. You have a great location, so it's in desire. And then in this case, the definition of core has changed, that you've de-risked the asset for future carbon penalties, carbon fines, or other like capital improvements you have to put on the building. So that's what you're seeing now in Europe, is this new definition of future-proofed core properties that not only get a little bit of a rent premium, but we're starting to see that they are, when they're selling, when they go full cycle and they sell, they get a little bit of an exit premium too. They're selling for more because the next buyer says, great, I don't have to, it's de-risked. I don't have to put any money into it over the term of what I think my investment's going to be. So I looked at that in Europe, and I saw how there were funds coming together that were looking to buy or build or retrofit more and more of these assets in the office sector, in the industrial logistics sector, and in the multifamily sector as well. And that's when I come full cycle to this thesis, Robert. And back to your question is, I think the same thing is going to happen essentially here in the United States. And in my thesis statement, I'm calling it a generational opportunity for a decade, because I think there is an opportunity in the United States to be an early mover and to start investing in this way, and then in an intelligent way, picking the right markets, picking the markets that are ready for this. There are markets where I think, like New York's an example. I already mentioned Boulder. I mentioned Portland and Seattle. Like, those markets have a tenant base that want this kind of a product. So that's where you should start. right? You should start, make your product and your market match. And you should start investing there. But my feeling is that if you're an early mover and you have the product that everyone desires, you have a period of time. I'm calling it a decade. This is all just a guess. Nobody really knows. You have a decade or so before the rest of the real estate industry catches up, realizes that you're right, and catches up. Either because that's a strategic decision they make, or because the regulations in their municipality have told them, hey, you need to wake up and change. So that's how I see it playing out in the US. As I said, in Europe, it's been top down. In the US, it is bottom up. I don't really see the United States Congress coming together on a national green building standard. It's, I don't know, not to get political, but I think it's too fractured right now to come together in that way. So I think the United States will be more complex than what the European system is. We'll have to pick and choose our markets, the utilities in those markets, and understand a little bit more of the nuance of dynamics about how the regulations are playing. But it'll still be a huge opportunity to decarbonize these real estates and then these real estate assets. And then I think the other part of it is that you may, besides what I mentioned before about having an opportunity maybe to rent it at a higher rate or sell it at a better, lower cap rate, you may also be finding, and this is another part that I'm tracking and really interested in, that there's going to be more advantageous financing coming out from our largest commercial lenders. Green loans that are going to give you a little bit of an interest rate premium for developing this kind of asset. And you may find that, I don't know if you're going to get a better insurance rate, but I think you will get insurance, which is good. And that the insurance industry is really thinking hard about what is resilience and what is readiness, in the built environment.
Well, what's so important about what the essence of everything you're saying is that and this is what building owners need to be listening to. The market is transforming.
Right.
And if you as a building owner are going to stay in your box, I like to say, in your 20th century box, right? You run the risk of your buildings becoming stranded assets, right? You want to talk about that for a little bit?
Yeah, it's a great point. I'm glad you brought it up. Is that I mentioned earlier there's a view towards a green premium for the highest performing assets in a market, and you can see that to a certain extent in New York. You can definitely see that in London and in some other European markets. So the opposite is true, is that not only is there a green premium, but there's a brown discount. Right. And the brown discount goes along with what you're saying is a stranded asset. And that is like what happens with an asset that, let's say it's very hard to abate, very expensive to abate its carbon emissions. It has a old clunky, gas-fired furnace, in the basement, leaky windows, leaky seal, leaky envelope, and just like it would be more expensive that it would be extremely expensive to retrofit that building to get it under the line of the regulations. And then in addition to that, that building might also have reoccurring carbon fines that basically wipe out its cash flow or diminish its cash flow. So then what you have then is an asset that nobody wants. Like, why would I want that kind of an asset which has this downward trajectory? It becomes stranded in the market, right. As you're saying, is there's very few buyers. And what I wrote about in the report, and I think these are early days, we're not there yet, is I call that like a climate distressed asset. And there may be companies that come up. I would predict there will be companies that come up, just like there were companies that came up to do brownfields decades ago. There will be companies that come up that want to take on those kind of, they're probably heavy on engineers, heavy on building scientists who can see that risk and price it correctly, and then hopefully fix those buildings. I mean, we can't just demolish these buildings. We have
Yes.
to come up with solutions. Yeah.
That's frankly, we have a value add brokerage strategy where our green building upgrade program is integral to the process. That's a big
Yeah.
part of how we're innovating. And you know, the commercial real estate field, basically in general, the response is, oh no, don't put any complications in the way of a transaction. Well, in the
Right.
20th century, that may have been true, but in the 21st century, as far as I'm concerned, you are not fulfilling your fiduciary responsibility to your client if you're not integrating that. If you have an owner who wants to sell and their building is old and tired, and you don't bring an upgrade to the process, you're leaving hundreds of thousands, if not millions of dollars on the table. So,
Yeah.
you know, and the other analogy I want to give is, you know, I got it started with commercial real estate in the 1980s. And at that time, building owners woke up to find asbestos abatement laws hitting their
Yeah.
buildings. And what happened, of course, is that, you know, buyers would look at buildings, they do their diligence, they'd find that it was asbestos, and they would lower their offer, their price that they would be willing to pay, because were going to have that cost of abating that asbestos. So I
Yeah.
like to say carbon today is like the new asbestos. It's going to devalue your building. And
Yeah.
so that's why, you know, smart decarbonization strategies are so critically important. So Paul, you know, I'm going to have you come back. We try to keep these to around 30 minutes, but there's just so
We'd
much
love to.
for us to explore. So we'll definitely have you come back. And again, I thank you so much. It's really, really been fantastic and just, you know, such an interesting discussion. So I really appreciate you. So
Yeah.
that concludes another inspiring episode of our Green to Gold podcast. We hope you enjoyed the deep dive into how building decarbonization mandates can be turned into profitable value add opportunities. A huge thank you to our incredible guest, Paul Rabinovitch, for sharing his expertise and shedding light on how to address client resistance and engaging in building decarbonization. And we want to thank our listeners. Please subscribe to our Green to Gold podcast and leave a review. And Paul, once again, thank you so much. And we will definitely have you on again.
Thanks, Robert. It was great being here.
Yeah, take care.